Hello and welcome to KLM Institute. Today's big story is all about the US dollar, and why it's bouncing back after a sharp fall, just days before key inflation data is released. Let's break it down in simple terms. After a big sell-off earlier this week, the US dollar made a strong comeback on Tuesday. Traders had sold off the dollar as they expected the Federal Reserve to cut interest rates soon. But now, with inflation numbers due in just a few days, the market is moving cautiously. So, why does this matter? Well, inflation data tells us how fast prices are rising in the US economy. If inflation is lower than expected, the Fed could lower interest rates. That usually makes the dollar weaker. But if inflation stays high, rate cuts might be delayed, keeping the dollar stronger. Right now, investors are watching closely. Most traders believe the Fed will start cutting rates by the end of the year, but how fast and how deep those cuts will be depends on this week's inflation report. In fact, many experts are predicting a 25 to 50 basis point rate cut. That's a big deal. A strong dollar affects everything from oil prices to emerging market currencies like the Indian rupee. At the moment, the dollar is stronger against most major currencies, except the Japanese yen. This bounce shows how sensitive global markets are to even small signals from the US central bank. So here's the big takeaway. The US dollar is not just a currency, it's a signal of where the global economy is heading. This rebound could be temporary, or it might be a sign of more stability if inflation remains under control. We'll keep tracking the data and bring you the latest updates as they unfold. Thanks for watching.